Welcome to Expert Trade Ideas step-by-step guide for swing traders. In this video, we'll cover a 10-point checklist for using the 1-day, 4-hour, and 65-minute charts to identify, enter, and manage swing trades. By following this method, you'll be able to trade systematically and confidently. Let's get started. We begin with the 1-day chart, which is your primary tool for analyzing the overall trend and identifying major support and resistance levels. 1. Analyze the trend. Look at the cyclical trend. Is market in advancing trend or correction? Use Fibonacci to help with this. Look at the 4, 8, and 12 EMAs to determine the trend. In an uptrend, these EMAs will be stacked upward, 4 above 8 and 8 above 12. The reverse is true for a downtrend. Use the 200 SMA to confirm the long-term bias. If the price is above it, the overall environment is bullish. If below, it's bearish. For 2, mark major levels. Identify key support and resistance zones using Camarilla pivots, with special focus on levels like S3, S4 for support, and R3, R4 for resistance. Highlight the highs and lows of the past few days to identify critical breakout or reversal areas. 3. Confirm volume momentum and institutional activity. Look for areas of rising volume near major levels to confirm significant market interest. Pay attention to large dark pool prints. These can signal where institutional activity is concentrated. When incorporating dark pool prints into your swing trading process, the time frame and context are crucial to understanding institutional behavior. Here's how to contextualize dark pool prints for swing trading. Dark pool prints. Over what period? Last week or recent days. Focus on recent significant prints from the last 1 to 7 trading days. These provide clues about short-term institutional activity tied to accumulation, reaccumulation, distribution, or redistribution patterns. For swing trades, this is typically the most actionable time frame. Over the last month, review dark pool prints over a 1-month period to identify longer-term positioning trends. Large clusters of prints near key levels, e.g. major support, resistance, or pivot levels, can signal strategic accumulation or distribution phases by institutions. Accumulation. Look for large prints below current price levels or near key support zones. Confirm with a rising trend in price and volume. If EMAs align bullishly and RSI is increasing above 50, this suggests institutions are building positions. Reaccumulation. Watch for consolidation periods near resistance, with consistent large prints. Breakouts above the consolidation zone often confirm reaccumulation. Distribution. Large prints above current price levels near resistance zones often signal distribution. This is typically paired with declining momentum, e.g., falling RSI, and possible bearish divergence. Redistribution. During sideways or declining trends, look for significant prints at lower highs. These often signal further downside pressure as institutions offload positions incrementally. Using dark pool prints with indicators. Volume confirmation. Rising or unusual volume on breakouts or breakdowns near key levels, paired with large prints, confirms institutional activity. EMA alignment. Use the 4, 8, and 12 EMAs to validate the trend. Bullish trend. If large prints coincide with EMAs stacked upward, this suggests accumulation or reaccumulation. Bearish trend. If EMAs are stacked downward, large prints near resistance indicate distribution or redistribution. RSI and divergences. Use RSI to check momentum. A rising RSI above 50 aligns with accumulation or reaccumulation. A falling RSI below 50 aligns with distribution or redistribution. By analyzing recent dark pool activity 1 to 7 days alongside longer-term trends up to 1 month, and pairing this with your EMA, RSI, and pivot levels, you can effectively anticipate and trade institutional behavior in the market. Check RSI on the daily chart. A reading above 50 suggests bullish momentum, while below 50 indicates bearish momentum. Overbought, above 70, or oversold below 30 levels may signal potential reversals. Once you've analyzed the 1-day chart, switch to the 4-hour chart to refine your setup and look for entry zones. For 4, focus on key levels. Recheck how price reacts at the daily levels you've marked. The 4-hour chart often provides a clearer view of whether these levels are holding or breaking. 5. Spot patterns and candlestick signals. Look for classic patterns like flags, pennants, or double tops bottoms near your marked levels. Watch for candlestick patterns such as engulfing candles or pin bars that confirm the trend continuation or reversal. 6. Validate with volume and RSI. Rising volume on a breakout or bounce strengthens the setup. RSI should align with your expected trade direction, rising for bullish trades and falling for bearish trades. Divergence can signal caution. The 65-minute chart is your tool for precision when timing your entry and setting up your trade. 7. Confirm entry timing. Look for pullbacks to the 4 EMA or consolidation near your key levels. Wait for a strong trigger candle, a breakout above resistance, or a bounce from support with increasing volume. 8. Double-check volume and RSI. Ensure volume supports the move, especially during breakouts or bounces. Use RSI to confirm momentum. If RSI is above 50 and rising, it supports a long trade. If below 50 and falling, it supports a short trade. Once you've entered the trade, effective management is key to maximizing gains and minimizing risk. 9. Set your stop loss and target. Place your stop loss below the nearest support for long trades or above resistance for shorts. Use Camarilla pivots or the ATR, average true range, to estimate reasonable price targets. 10. Monitor the trade and adjust stops. Shift your focus back to the 4-hour or daily chart to manage the trade. Use the 8 EMA as a trailing stop-loss guide. If price moves significantly in your favor, consider locking in partial profits at major pivot levels or other key resistance support zones. And there you have it. A structured 10-point checklist for swing trading using the 1-day, 4-hour, and 65-minute charts. By focusing on higher time frames for trend and levels and refining entries with the 65-minute chart, you can trade with greater discipline and confidence. Remember, swing trading requires patience and consistency. Stick to your plan, and over time, you'll see results. Thanks for watching, and happy trading. If you found this video helpful, don't forget to like, subscribe, and share our YouTube channel. Got questions? Drop them in the comments below, and we'll be happy to help. See you in the next video.